President Obama hosted top executives from some of the nation's biggest banks and insurance companies at the White House today for a regular meeting of the Financial Services Forum. On the agenda, immigration reform, job creation, and cybersecurity, a growing concern for the industry.
Now, some of those same bank CEOs are in the process of making some major decisions about your local bank branch. Consumer habits are changing. Bank branches aren't as busy, and all that pricey corner real estate may no longer be necessary. And Kayla Tausche is here with more. Hi, Kayla.
Hi, Susie. Nearly 100,000 bank branches are open for business. They're costly, in many cases inefficient, and thanks to better mobile technology and smarter ATMs, consumers are going to them less and less. It's left the industry in a precarious position. None wants to see its physical presence shrink, but in the end, there may not be a choice.
Times Square bustles with activity. Its bank branches, no exception. But these New Yorkers weren't exactly satisfied customers, which could be telling for the industry.
Honestly, the last time I came here was to cancel my account.
It's easier to do it from home and online, much easier.
I usually go to the ATM.
Because it's easier and I don't have to deal with people.
It's not just an urban phenomenon. Mobile banking usage across the U.S. jumped double digits last year. Smart ATMs and apps are doing the work bank tellers used to do. It's no surprise, then, that branches across America are shutting down. 1,100 last year alone, the most in a 4-year stretch of downsizing.
We really don't need branches as we look into the future to perform basic transactional tasks.
But they do for big-ticket transactions like getting a loan. That's why Jonathan Larson, who runs Citigroup's 4,000 global branches, says the branch won't go away. It just needs to be where the most customers are, in the big cities.
We will probably end up over time with more outlets. It's just that they'll be of a different nature and on average smaller than the traditional outlets.
Other banks are on board. Bank of America shuttered 250 branches last year using the money saved for a technology facelift at other stores. Wells Fargo, the largest domestic branch operator, is experimenting with ways to cut costs so it too can grow.
We're not about closing stores, we're opening stores. We're trying to make ourselves more convenient for our customers.
Another branch stalwart, JP Chase, building 100 new outposts each year, focusing on financial advisory services and letting technology handle the simple stuff. Smaller and smarter, how the industry hopes to keep its branches relevant.
Critics say the branch has just become an expensive billboard and that banks could afford to axe as much as 25% of them. Still, it's a valuable tool for attracting business. Consumers say they do research online, but for big money decisions like getting a mortgage or credit card, they want to do it in person.
Kayla, I know you did a survey of a lot of consumers to see how they feel about their bank branch and whether they would have an account at a bank if it didn't have a branch. I know how I would answer that, but I want to know what the people who responded said.
We're not in that situation now, but it looks like down the road that's where the industry could go. We polled about 1,000 respondents. 60% said they would not consider banking with a firm that had no physical presence where they could go if they needed to troubleshoot or had to have a problem. 30% said yes, they would consider it. 9% said maybe.
The only time I've been in a bank branch recently is because mine has those coin counter machines, and I can get my coins counted easily. That's the only reason I use it. Tomorrow, big earnings out of a couple of big banks, Wells Fargo and JP Morgan. What's the forecast?
There's a little bit of concern about what we're going to see from these banks for two reasons. One, interest rates are still low, and of course, banks' number one business is lending. If you're lending at a lower interest rate, you make less money. We're concerned about that. The other thing is they've been making a lot of business off the mortgage boom. Because of these low interest rates, a lot of people have been refinancing their mortgages. That activity is slowing down. So analysts are cautious about what we're going to see from the banks.